welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the opening action on the D Street. Remember, as of yesterday, when we did see midweek trade unfold after some days of bounces, we did see a narrow range of consolidation play out on the D Street, especially on the benchmark level. The index Nifty that ended the day down by 42 odd points, just below 23,700. Even though the broader markets truly outperformed, it was the consumption space that actually took back foot. But the oil and gas, the metals, the commodity oriented stocks, they were outperforming in yesterday's trade as well. As we move into today, again, there is an expectation that both the Nifty and the Sensex are likely to react positively to upbeat global cues. As the Gift Nifty is pointing out, there's a 31 points higher start indicated at 23,804. So indicating for a positive start for the Indian markets. As far as the global cues are concerned, Asia Pacific stocks, they opened higher this morning following the gains on the Wall Street overnight. And the Nikkei was trading about 0.6% higher in the morning trade. ASX 200 rose by about 0.8%. Kospi was up by 0.3%. And what we've seen as far as the US markets are concerned, the Dow Jones climbed by 0.7%, driven by a strong rally in NVIDIA. The S&P 500 increased 0.4%, while the Nasdaq rose about 0.2% in trade as well. Remember, the NVIDIA raised more than 5% after Supermicro Computer announced full launch of its AI data center powered by NVIDIA's Blackwell platform. So the entire tech space continues to be in focus as far as the US is concerned. Of course, in the US, investors are now awaiting US jobless claims data coupled with Bank of England's interest rate decision. As far as the key domestic cues are concerned, the RBI's monetary policy meeting will be extremely important to track. Tomorrow is when we will finally get the announcement. This is hoping that the first interest rate cut in nearly 5 years could be announced tomorrow, aiming to boost the faltering economy right after the union budget has done its little bit right there. Of course, apart from this, we will be focused on a whole host of earnings that will be important to track. But let's welcome our guest on board, Mr. Gaurav Dua, Head of Capital Market Strategy at Mirae Asset Share Khan, joining right in on the morning edition. Warm welcome to you, Gaurav, and thank you so much for taking the time out for this discussion. You know, one of the biggest events that the markets were eyeing is now behind us. The union budget has been delivered, surprising many on the tax cut bonanza that has come in. But again, the question comes in whether consumption will now take priority and capex will take a backseat. How are you assessing the fine print of the budget and what it means for the markets?
So yes, I think budget was excellent on all the counts. Though there are a lot of talks about issues inside of the capex. Yes, railways has been flat, but if you see overall, there is 17.4% increase in the capital outlay. Effective, this capital outlay is going up to 15.5 trillion rupees as compared to 13.2 in this last year. So I don't think capital or outlay or the capex story is over. Yes, but the market is adjusting to the fact that the kind of rally which was there in some of these stocks, and I've been in your show and have been advising caution against trying to chase the momentum in power, defense, railways for the past few months because the valuations were not supportive at all. I think that part of the correction is now taking place, and I think you'll soon see very good levels to enter these kind of stocks, so you'll get a time to accumulate, but this time you have to be selective in this space. You can't just go and buy everything. These are structural stories, be it railway, defense, or power, and they'll just play out, but they'll lag behind for next few months or probably for 6 to 8 months from here. Consumption, yes, consumption has actually come back on the radar of the investors after the budget. The huge changes in the income tax slab, leaving about 1 lakh crores in the hands of the taxpayer, is a good boost to the consumption. This was actually also helped by RBI's infusion of 1.5 lakh crores of liquidity 1 week prior to the budget. and now RBI tomorrow is expected to follow it through with a interest rate cut. Now, over and above this, what most of the market participants are not talking about is that by the end of this year, you will have the eighth pay commission. Now, that would mean that millions of central and state government employees will see a significant increase in their salary levels, and they'll also get arrears. That means another 1 lakh crore will come in the hands of the consumer by the January of 2026. So there is a continuous boost to the consumption story now, and there are a lot of stocks in that space which are available at much more reasonable valuation compared to the capex or the engineering part of the stock market.
Absolutely. Now, Gaurav, the question comes in that after a days of buying, again the FPIs are on a selling spree. Again they have sold off 1,600 worth crore rupees of stocks in the Indian markets. So, what is really deterring the FPIs to get the confidence to invest in the Indian markets? And more importantly, do you further see FPIs getting further deterred if the rate cut is announced, because then they are also likely to get rest benefit by investing in the Indian market. So is that going to be further on the negative side?
So I am of the camp that FPIs are not going to come back fast into India. Their selling pressure could ease out. But if I am a US investor and I am getting 4.5%, 5% on bonds in US, why would I take risk of investing in India, which is at 100% premium to rest of the emerging markets, and the earning growth in this year is slowing down to low single this digit. So you are expecting 8 to 10% kind of an appreciation in India, whereas you're getting 4.5, 5% risk free in US. Number two, that 8 to 10% also in the dollar terms might come down because there is intense pressure on the rupee because of the trade war, tariff wars across the world. Most of the countries comparable to us are going to let their currency go down, depreciate to mitigate the effect of the tariffs. And I'm talking about China here. And that will force India also to let the rupee go down. We are expecting rupee to touch 89, 90 kind of a level. That means another 5-6% loss to the foreign investor, even if market don't go down from here. So it doesn't make business sense for the FPI to come back to India in a hurry. I'm sure they will be looking at certain stocks, certain sectors. But you think there's going to be a gush of money, foreign money back into India very soon? I think you're going to be very disappointed there.
Fair point. Let's so the Nifty is actually hinting out at a positive start in the pre-open. Just wanted to mention that 23,740 is what we're looking at as the pre-open indication is 0.16% higher in trade. Let's also pull up some of the stocks to get an idea of how the heavyweight counters are really buzzing in the morning edition. Now we are at 23,825, improving there, half what percent higher. Let's see whether stocks like HDFC Bank, Reliance, Infosys, the big heavyweights from various sectors are really contributing to the gains. Flat trade with a positive bias on HDFC Bank at 1738. Let's also pull up Reliance and Infosys, the other heavyweight counters, 0.7% of an uptick on RIL. 1288. Let's also pull up Infi, 1.2% higher. So I think the Infi and the IT related stocks could be in focus. ICICI Bank about 1% higher. So some of the large private sector banks could be in focus as well. SBI about 1.1% higher, carrying on with the move from yesterday on the PSU banking front. Gaurav let's understand from you. You rightly pointed out that consumption is going to be the key area of focus now. So, which are the key stocks that you are now looking at positively? Is it largely focused on the FMCG, large FMCG companies? Are you also including consumer discretionaries and staples? How are you really looking around to navigate this opportunity that may be now getting ready for its own leg of rally?
So it's a mix. So on the FMCG side, we believe Dabur is at very reasonable valuation. The rural economy is likely to this bounce back faster than the urban side. That's what we believe. Dabur and ITC are the picks on the FMCG side. On the discretionary side, we are playing it across the sectors. We like urban fashion, Bharti Airtel. We like stocks like this Lemon Tree. So these are some of the mix of stocks within the consumer space that we like, and I think that's the space which is going to outperform this year.
Okay, fair point. Let's also discuss with you some of the rate sensitive pockets now, sir, since that will be in focus tomorrow and beyond that as well. In case the rate cut of, say, a 25 basis points, that's largely what the street is probably hoping on, comes through. Which are the pockets that you believe will be in for, at least a knee jerk reaction tomorrow?
So it's always the banks and the real estate stocks that tend to react very fast to any news on the interest rate or the liquidity side. That is what we have seen. And within the banks, I think some of the private banks have really come down, like Axis. Decline has been this pretty sharp. This IndusInd Bank, and also the entire public sector bank basket. Now, in case of NBFCs, again, we have seen a lot of correction there, both in terms of the asset quality issues and then the followed by the liquidity squeeze. So that's another space where we think some of the stocks will do well. Bajaj Finance, I think, has been an underperformer for
Yeah.
a long time, and I think this year is going to be a comeback of that stock. So a lot of people who have lost hope in the stock, and I know a lot of small investor who kept holding on to stock and have exited in past few months. I think this is a stock which is going to surprise on the upside in this year.
33% already up for Bajaj Finance in just the last 2 months. So that's a strong move for such a large heavyweight again. How much more upside would you expect on Bajaj Finance from here as well, sir?
So I think there are a lot of this tailwinds for it. They had some issues in terms of this regulatory pressure, which is gone now. They have done some good kind of tie-ups, for example, with Airtel, where all the Airtel customers will get Bajaj Finance products now. What we have seen is that there was a lot of fear in terms of the kind of products that will be rolled out by CGO, Geo Finance, which has not happened. And then overall, the macro environment is getting favorable for the NBFC with the interest rates going down, liquidity likely to be better in this year. So I think
Yes.
Bajaj, after a good consolidation phase of past 2.5 years, I think is set to break out, and I'll not be surprised from here you end up with 18 to 20% kind of gain in this market. That will be an outperform.
Okay, got that. Fair point. I'll actually circle back to our own consumption-oriented theme that we have been discussing, and I wanted to just include some more stocks within this basket. Now, for those who are at least living in the urban cities, the closest proximity to everyday consumption happens with quick commerce giants like Swiggy and Zomato. We are so used to of using these apps on a daily basis that sometimes people are used to order 2 to 3 times in a single day from a single app as well. So that's the kind of demand that these people are facing in the urban cities at least. When it comes to boosting consumption, do you think these will be the first reflective points and therefore one should keep focus at it? Why am I asking this is because on the earnings factor, there has been disappointment from Zomato and now Swiggy will be reacting again. The pre-open rates are indicating to a 6% lower start. Although Zomato has pulled up from 204 kind of lower levels, but there was this concern about high competition, about front loading of all the cash and the expansion at this point in time that pulled down Swiggy also. And now again, Swiggy has come down with losses in this quarterly earnings as well. How should one be really navigating the opportunities as well as the current financial performance on these two stocks, sir?
So yes, I mean there are some missing chinks in the quarterly numbers, especially in case of Swiggy, and the quick commerce part in case of Swiggy is very concentrated in Delhi and some part of northern region. So that is why we have seen that Zomato trades at a quite a bit of premium as compared to Swiggy, and we believe it's rightly so. And in this kind of a space, which is still evolving and a lot of changes can happen, we would like to stick with the leader. So Zomato and PB, the FinTech are two new age stocks been recommending or always been favoring on your shows because we believe that they have turned profitable. They don't have any kind of significant cash burn now, and plus they are the leaders in their space with a proven kind of a track record.
Fair point. Okay. Point taken there, sir. And, apart from this, I also wanted to get a sense of the new age tech space as well. There's been a long void. We haven't been discussing this space also too much. But as far as some of the earnings have come in, beyond Swiggy and Zomato, are you looking at any other interesting names, or there is a period of probably challenges that this space is facing at this point, sir?
So as I said, this policy bazaar is a stock that we like, and it's
Okay.
a stock that we are also holding in our portfolio management services (PMS) scheme. We believe again this is in a space which has a structural this thing, growth story. It's one of the largest players in that space. It is a profitable player. So that's I think if you want to play the newest stock, Zomato and Policy Bazaar are two stocks that we will bet on.
Okay, fair point on that front as well. Let's also look at some of the other earnings that have come in. And I'd like to bring out Happiest Minds in front, sir. The company reported 16% drop in profit after tax. This was higher finance costs and revenue for the quarter grew about 27.5%. Now, along with Happiest Minds, I want you to also focus on all the mid-cap IT names. There was a sharp surge again at the towards the end of January when Persistent, Coforge, and Emphasis came out with their earnings. Them again showing an outperformance in terms of earnings when it comes to the larger peers in the IT space. Overall, on the IT pack, what is your own approach? Of course, keeping in mind that we have that Trump tariff overhang, we have all the policy uncertainties that could come in from US, and IT will probably be the first point of reaction that we will see of any negative news probably that comes in from the US.
So we are being no positive on the IT stocks. So we have biggest tailwind there in terms of the rupee going down. So depreciation of rupee,
Yes.
IT is one of the this beneficiaries of that. Number two,
Hmm.
if you see, most of the companies are actually upgrading their guidance, be it Infosys or last night what you see from the Cognizant, right? So they are talking in terms of the improving outlook. The spending is increasing. Tariffs can come, but I don't think US will take any kind of a call which will put their tech companies on a back foot because a lot of these large players now outsource from India. So we are not worried about it. In fact, we believe the macro environment is actually supportive for the IT companies. But here again, the valuations in some of these stocks is basically run ahead of the listing fair value. So you need to be careful. What we like is Infosys and HCL Tech in the large caps, and in the mid cap, small cap space, we like the Birlas of Coforge, Mastech.
Fair point. Fair point. Okay. notice is that pharma is also towards the same, export-oriented space that it works in. We have seen an outperformance in the pharma stocks in 2024. The index ran up about close to 40%, outperforming the rest of the sectors by a wide margin again. Many of the stocks which have been underperforming for the past are actually coming back in a strong fashion. What exactly is your expectation here, sir, as far as the pharma index is concerned?
So overall since October, November, we have been holding a view to reduce exposure to some of these momentum spaces, which included engineering, capital goods, and increase exposure to IT, pharma, some of the select this in consumer names, banking names, and this is where we still stand, and this is what we believe should be the theme for the year of 2025. So yes, pharma is a space which again I believe will do better than the overall market in this year. And Sun Pharma and Biocon are two listing picks in the space. And so if you see, both of them are doing this thing pretty well in terms of their export, US market. Biocon, in fact, for next 2 years, we believe is going to show one of the strongest earning growth in the space. So that's a stock again which has been underperformer, and I think will really catch up in this year.
Right. Mr. Dua, you did talk about the rupee weakness. Of course, we do know that probably these export-oriented sectors might benefit, but crossing the 87 mark, there is fear that it could hit 90. How are you, really looking at this scenario? By when does it really become a real cause of concern? And when do you see the RBI and the government really stepping in to contain the fall from the current levels? Currently, there does not seem to be an over concern as far as the rupee fall is concerned, because the government also believes that rupee depreciation has been still better off than the other emerging market currencies. So, how are you looking at the rupee fall? What does it really mean for an average retail investor when one pencils in what could be the impact?
So yes, we have done better than the other emerging market in terms of depreciation of rupee against the dollar, and that I think some of it was because the RBI was trying to support the rupee. They have put around 20-25 billion dollars of our foreign existing reserves onto it, where dollars were sold, and that was the reason for the suck out of the liquidity from the banking system. But I think government and the central bank have realized that, and what they are doing now is infusing back the liquidity and not try to aggressively support the rupee, which we believe is the right way ahead. And so that's why I personally believe that 89, 90 kind of a level is something which you should expect of rupee against the US dollar in this year. Will it happen in 2 months? I don't think so. But yes, by second half of this year, you might be able to see those kind of levels. And what does it mean for the investor and economy is the depreciation of rupee actually means you are importing inflation into the country, where because a lot of your energy is basically imported. However, in this case, the crude prices are down, so that the whole risk that rupee depreciation, crude going up, and that creating a lot of issue in the economy is not on the table. So I think that is why the government or the RBI will let rupee find its own place.
Absolutely. The markets have opened positive uptake on both the Nifty and the Nifty Bank. 23,724 as the Nifty is right now, 0.1% higher. The Nifty Bank about flat with the positive bias, but at 50,373. Mid caps about quarter percent higher in trade. It's the IT stocks that are doing well, about 1% higher now. We also have the pharma index moving up by 0.3%. Metals carrying on from yesterday, about 0.2% higher. Flat trade on the FMCG pack and the auto pack right now. But along with the IT, it's the PSU banks that's also pulling up in trade. Mid caps, of course, 0.3% higher. So continuing with their move from yesterday again. Those are the pockets that are moving up. 1,218 advances on the NSE stocks versus 368 declines. So the market breadth is inching towards positive. Both the mid and the small caps are actually up and about. Quarter percent higher for the small caps, about 0.4% uptick for the mid cap index as of now in trade. When we look at the other pockets, financials are absolutely flat at this point in time. FMCG, auto, and CPSE index. These are flat with the negative bias, but the rest of the pockets look higher in trade. Top Nifty gainers, Wipro, Bajaj Finance. You have Infosys. These are the top movers as far as the Nifty is concerned. You also have IT names like Tech Mahindra and TCS pulling up about 1% higher for both. IndusInd Bank also pulling up from the private sector banks. You have Cummins that's reacting to its earnings about 3% higher. There was an all across beat on Cummins, and that is also moving up. But on the loser side, you have Bharti Airtel, Kotak Mahindra Bank, Britannia. These are the pockets that are declining in trade. Shriram Finance has declined, Apollo Hospitals, M&M, Kotak Mahindra Bank. You also have Maruti, L&T, BEL, Sun Pharma, and Axis Bank towards the lower end. But realty players like DLF, that's pulling up 2.2% higher in trade for this one as far as the real estate stocks are concerned. Let us also pull up some of the other earnings impacts that we are looking at. So we also have Swiggy 5% lower, 396. That was being seen in the pre-opening trade also, that will be reacting negatively. You also have Timken India 1.5% lower, CCL Products post earnings 1.5% lower. Welspun Corp, however, has pulled up post the earnings. Gujarat Gas is down 2% post earnings. So those are the earnings related stocks that you are seeing a reaction to right now. But up and about for the Nifty bank and the broader markets as we speak. Let's get into the conversation back with Mr. Gaurav. Mr. Dua, how do you really see the opening at this point in time? What really looks important for you to now keep in mind and to keep your focus on a fresh in terms of key sectors?
So, we have had a decent opening, and the global cues were excellent. All the indices were up, Asian markets were up, dollar index had gone down, crude had gone down, and so quarterly numbers which came off yesterday were great. So I think with this kind of a tailwind, if you are not able to cross the crucial levels of 23, 750, 800, then I think the market could take some more time here. RBI rate cut and a good commentary could be one of the triggers that could make the momentum go towards 24,000 or 24,200. But beyond that, in the short term, looks little difficult to us. Banks are not supporting as of now, though banking index is up, but we have State Bank of India that is to announce its quarterly numbers today, and will be very, very
Yes,
important for
yes.
the sustainable of the rally in the banking index. So it's something where market is in a very, very small range, and that becomes very, very tough for the intraday traders.
Absolutely. You know what else is going to be in focus? ITC also when it comes to the earnings factor, sir. What's your expectation here? We've already had the demerger of the hotels in place, and after that, this earnings will be coming in. Your sense of how should one be really looking at the primary player ITC, and of course the futuristic trading stock that will now come in, ITC hotels. For those shareholders who already had ITC shares, they already also will automatically get ITC hotels. But how should a fresh retail investor really look at both these opportunities now?
So ITC Hotel is already got listed. I think this is a stock which you should hold on to. We are looking around 230 to 40 kind of a price there.
Okay.
ITC is thing where budget did not have any bad news, which was the good news. However, it will be very important that post this, what kind of a volume growth they are able to show in quarter three, and what kind of indications they are able to give for the forward market. They've been losing market share to this Godfrey Phillips, which is actually not good news. So So I think that's where people want to hear what is the management trying to do about it. But because end of the day, tobacco is still there, one of the largest cash cows, and that is what is basically a primary driver for the stock prices.
Absolutely. Let's also understand from the overall earnings perspective, sir. So far, the earnings that have come in, how have you assessed the performance in Q3? Remember when we were discussing with you ahead of Q3 earnings, there was this wide, concern that whether after Q2's disappointment, the Q3 disappointment will continue for a large band of earnings that will come in. So far, what is the assessment like? Where do you think some outperformance and underperformance has been lying?
So, good part is after the week Q1, Q2, and the kind of this commentary which came in ahead of the numbers, quarterly numbers, expectations were already down. So, quarterly numbers are largely in line with the expectation. IT numbers have been in line, but the this commentary is good. Consumption is where there is still a problem. That is what we've seen in HUL, Zomato, APL Apollo across the different kind of categories. You've seen that consumption was a drag, which was also on the expected line, but the commentary also wasn't encouraging. However, after the budget, I think that's the space which have got some boost, and that is what I think will help the earnings in 2026. 2025 FY 2025 has been a year where you will have a mid to low single digit kind of growth in Nifty earnings. However, the expectation still is that you will get back to 14% kind of growth in Nifty earnings in FY 2026. But that I think is still at a risk if we don't see a quick revival in the consumer demand.
Okay, okay, got that. So the other space is the auto space as well that I wanted your view on, particularly both on two-wheelers and the four-wheelers. What's the expectation here? This has been one space that has been facing a lot of muted demand during the entire quarter, of festive season gone by. The demand was not as per expected, and that's what most of the managements highlighted. But come last 2 months, sales figures that have come in, also the one that was just gone by, we've actually seen historic sales figures again from the likes of Maruti and some of the leading players there. So, how is your approach going to be? Nothing too negative has come in for the auto space. This used to be a space that would find their names on the negative side every time budgets would be presented a few years ago. But at least that thing is sorted because now the GST has been taken out. Undue taxation is not announced for the auto parts. In fact, there has been some announcement for EV related plays, battery related plays on the positive side when it comes to custom duty. So, how would you really look at the auto players particularly?
So after the January auto sales number, what we have seen is that people have largely maintained their, volume growth estimates for two-wheelers and also for the passenger cars. But there has been cut in the sales volume expectation for the commercial vehicle space. So that has been what we have seen after the January quarter numbers. Now January month numbers, sales numbers. Now Maruti, which you spoke about, was the healthy
Yes.
growth was actually driven by exports. So it is not that the domestic market has started improving, but Maruti is getting tailwinds in terms of increasing demand for export because of its parent, and I think that's where there is a lot of now focus shifting to this thing, Maruti. However, we continue to prefer Mahindra and Mahindra, and that's a stock that we've been holding for more than 2 years. It has been an outperformer, and we still believe that their overall strategy of efficient capital allocation and improving the performance of the subsidiary companies and plus the healthy demand that they have seen for their passenger vehicles, especially on the this SUV space and this EV space. So that makes Mahindra and Mahindra the preferred stock for us in this space.
Okay, M&M remains the preferred stock for this space. Fair point. Again, circling back to the consumption space, paints industry is something that I wanted to focus on. Yesterday, we did see Asian Paints, reacting to the earnings. Again, the earnings have been muted. The company still and the management still believes that they're cautiously optimistic on the demand. There is a concern on the urban demand, particularly to take off. There is still going to be some more time before the money comes into the hands of people, like you were talking about. 1 lakh crore rupees will be coming in by way of tax cuts, and that will only come in by April. So it's going to be deferred again to see how much of that pie really comes into the paints industry or the discretionary industry again. But there is this consign Arolac, you can see after the earnings, that's pulled up because of strong earnings coming in. So I want to understand what's really happening here. The leader continuously facing pressure, some of the mid caps actually managing to post in a similar quarter better set of numbers. How should one be really looking at the entire space there?
So yes, the macro environment is improving with the better, money or more money to spend in hands of the taxpayer. The demand is likely to go up. Yes, there is a debate around how much of that will come into paints, but the fact still, remains that you have two large players who have entered the space, and they have not been able to make the kind of dent that they were expecting to make. So we could still expect some very aggressive kind of moves from that side, and that will keep most of the paint stocks, on the edge. Volume is not great, and with rising this thing, competition, margins will be under pressure. So yes, the P ratios have been derated already in this space, but we still believe that we don't have a strong case to go ahead and start investing in some of these stocks.
Fair point. All right, Gaurav sir, thank you so much for being with us in the morning edition today and helping us navigate through the current trends in the markets and how things will shape up in the near future because of all the triggers that we have discussed. Many thanks. It's always a pleasure to speak to you and get those wonderful insights for our viewers. And hope to see you back very soon. Another edition of Business Today Television.
Thank you so much, and I also want to state that all the stocks that we have spoken about have been, recommended by us to our clients, and we would also be holding some of these stocks in our funds.
Okay, disclosure is in place. Thank you so much, Mr. Dua, for being with us. Viewers, 9:30 right now, and 15 minutes of candle is out. We are now flat at 23,700. In fact, risking slipping below that. So we'll see how technically things are improving. And to help us with that, we have another guest joining in, Mr. Kunal V. Parar, Vice President Technical Research at Choice Equity Broking, is now with us to help us with the technicals on the markets right now. First 15 minutes of candle out. Kunal, what exactly is your sense? How are the markets going to be shaping up?
Good morning. And if we talk about market right now, market is facing some strong resistance of its 50 days moving average. No doubt, during a day before yesterday, Nifty gave a close above its 50 days moving average, but right now it is trading below that 50 days moving average. So it seems that Nifty is facing some kind of resistance, and we may see some kind of correction as well up to the level of 23,600 to 23,550. But this correction would be like best opportunity to get into the Nifty for long side, because from there we may see a good bounce back up to the level of again 23,750. And at this level, if Nifty gives a close above this 50 days moving average, then further one side momentum would be there up to the level of 24,400. So minor correction, minor dip would be there, and one can use that minor dip for long only position.
The markets have slipped before below the flat line now, 23,688, and the Nifty Bank at 50,281 now, flat with a negative bias. let's look at some of the pockets that we can actually look at to take Kunal's view in terms of key stocks. Let's discuss first banks, Kunal. Why is this important? Is because tomorrow is RBI's monetary policy, and any decision right there will be first seen on the Nifty bank and on the banking and the financial space as a whole. What exactly are you really looking at here? There is also the results of SBI that's going to be coming in. So that PSU bank leader will also be in focus because of that. How are you navigating the moves? What are technicals telling you? Large private sector banks or the PSU banks? Where are you finding, and even financials like Bajaj Finance has been continuously soaring. How are you navigating through all these opportunities?
Well, definitely tomorrow is RBI's policy, and market is expecting some kind of rate cut by 20 BPS and all. And one more thing that the market is keeping an eye, that new governor will comment particularly on the monetary policy and overall economic growth. So that monetary policy, that particular comment will be like more. It has a more weightage than the rate cut, and overall, everyone is keeping an eye on that particular commentary. Now let's talk on this private bank PSUs and NBFCs right now. The way Bank Nifty has been trading, the few private banks are been trading, and yes, result is there of SBI. So even it has some impact on the banking sector. And if we talk about few stocks like ICICI Bank, which is trading at 1272 level, I think if we keep these stocks up out of this news effect, then we may see a good upside momentum, particularly in the HDFC Bank, IDFC, ICICI Bank, and private banking. Right now, ICICI bank is trading at 1272 level, up by minus 0.34 percentage. But on a daily chart, it has been trading in an upper rising channel formation above its long term moving averages. So we may see a good further momentum from the present level. So one can get into the stock without fear, without any fear for medium term to long term. We may see a good upside momentum up to the level 1300 to 1340, while downside strong support comes at 1240. And if we talk about HDFC Bank, even HDFC Bank looks very attractive. Right now, HDFC Bank is trading at 1729. No doubt it is down by 0.14 percentage. But we may see good upside momentum in the HDFC Bank. One can get into the stock at present level because HDFC Bank has given a breakout on a early chart. Means it has given a breakout of its double bottom formation on an early chart. So based on this formation, we can see a further upside momentum. One can get into the stock at present level for an upside momentum up to the level of 1780 to 1850, while downside strong support comes at 1700. And if we talk about NBFC and Bajaj Finance, we have seen a magnificent momentum, particularly in the Bajaj Finance, and further upside momentum would be there based on the current chart. If we talk about upside momentum, right now stock is trading at 8564. Stock has already given a breakout of 7800. Now, as per the rectangle theory, for the upside would be there up to the level of 8800 to 9000 level. However, I'm not recommending to go for fresh buy because risk reward is not that much of favorable for creating any long. But yes, if you have this stock in your portfolio, then hold this stock for an upside target up to the level of 8800.
Okay, fair point. Kunal, markets are slipping from the day's high point already. In the mid and the small caps, the cut is deeper. Mid caps have slipped about 0.8% from the day's high, over 400 points right there. So we are seeing some weakness percolate into the markets, flattish with a negative bias trade on the Nifty, now 0.4% lower. In fact, that's also fallen about 90 points from the day's high, and nearly a percent lower for the mid caps now. So that's the weakness that is coming in on the benchmark indices as well as the broader market indices. Mid and small caps, particularly, what is your expectation, Yogna?
Well, mid cap and small cap will always be like high beta index in terms of if we compare it with the benchmark, and nothing to worry about this index as well because VIX is trading up by 3%, and mid cap and small cap, the way this sector looks on a daily chart, I think we may see good upside momentum. Today's momentum is just like it's a daily routine game that we are seeing on a daily chart. But the way this mid cap is the way this mid cap has been trading on a daily chart, I think further upside would be there up to the level of 15,300 to 15,600, while downside support comes at 14,900. Nothing to worry about this mid cap and small cap. While I would suggest to create a healthy portfolio with mid cap and small cap. If anybody want to get into the stock market for with proper diversification and for long term portfolio, then I think this is the best time to get into the market with 50% allocations to large cap, while 30% allocations to mid cap and 20% allocation to small cap. And if anyone follow this kind of diversification, then they may beat the benchmark, and they may generate some kind of alpha above the benchmark. So I think nothing to worry about this mid cap and small cap. Just go for it.
Okay, got that. So that's as far as the expectation goes in the mid and the small caps. Let's look at some other pockets. Let's discuss one pocket, which is the gems and the jewelry space. Why? Because this was in thick focus, gold prices at record highs, and this entire space, including stocks like Titan, they were being preferred. Now, post earnings, we are also going to be looking at today. There is a weakness, 1.5% lower on Titan, 3% lower on Senco Gold. There's some correction on PC Jewelers and Kalyan Jewelers. There is this pledging news from the promoters that is further pulling down the stock right there. Kunal, on the gems and the jewelry space, are you looking at any interesting plays at this point in time, or should one stay away? Because gold prices are at record high levels. Just yesterday, we came to know that in terms of gold jewelry consumption, India has also overtaken China. So, despite the rising prices, despite record high prices of gold, Indians have continued to bet big on gold jewelry. How would you look at these jewelers?
Well, I think we are seeing some downside momentum, particularly in this gems and jewelry stock, and simultaneously we are also witnessing all-time high in gold. But nothing to worry about these ratios. I think one can keep an eye on this Titan. Since last 2 days, Titans has been falling. It made a high of 3,652. Right now, it is trading at 3,450, and even it has some impact, particularly on the result as well. So if Titan comes up to the level of 3,400 to 3,350, I think it would become a good buying opportunity. So rather to invest particularly in the gold, one can keep an eye on this Titan, because we may see some good upside momentum, and even it beat the goals return as well. So any fall up to the level of 3,400 to 3,350, one can get into the stock for an upside movement up to the level of 3,650 and more above up to the level of 3,850. While downside strong support comes at 3,300. And if you talk about other stocks like Kalyan Jewelers, TBJ and all, I think they all are like high beta stocks, and high volatility is there. So if anybody want to focus particularly on the good and healthy portfolio, then please focus on this Titan as of now.
Okay. When we're talking about the consumption space, let's also focus on quick commerce yet again. We did discuss with Gaurav ji between Zomato and Swiggy. How is he navigating through the fresh moves? Both the stocks are now down in trade today after Swiggy's disappointing earnings, 3.5% lower for Swiggy. And this Zomato stock has also slipped into the red now. It had opened in the green. Between Zomato and Swiggy, how are you navigating through fresh moves? Earnings disappointment continue, but brokerage houses still have a positive take on Zomato. Even today, there are targets of 340 being seen on that one, but Swiggy is falling and it has been consistently under pressure since Zomato's earnings came through.
Well, definitely in terms of technical, definitely I'll go with Zomato as well. And actually, we saw some current, particularly in the Swiggy, but after this earning and stock has fell from 470 to 403 level. I think it may take time to get it to get the recovery. But meantime, I think Zomato looks very attractive compared to Swiggy. Right now, Zomato is trading somewhere around 231 level, and it has been trading above its on long-term moving averages. Not only this, on an early chart, stock has also given a breakout of its previous top, which was placed at 223. So Zomato looks very attractive compared to Swiggy. One can get into the stock at present table. Downside support comes at 215. If you talk about upper side target, then first target comes at 240, and if stock breaks this 240, then further upside would be there up to the level of 260. So definitely, I'll go with Zomato. If I have a, if I have a choice between Zomato and Swiggy.
Okay. Now, let's come to your specific stock ideas, Kunal. In the current markets, right ahead of the big RBI policy tomorrow, are you going to be taking any trading bets, and which ones would those be?
Well, definitely, I'll take a bet, and that would be related to defensive counter only, and I'll focus particularly on the pharma sectors. Dr. Reddy looks very attractive on a daily chart. Even it has given a breakout on an early chart, and the further upside momentum would be there based on the breakout. One can get into the stock at present level. Right now, stock is trading at 1250 level. And in the morning itself, we are witnessing 2% upside momentum, that too with the above average volume. So one can get into the stock at present level. If we talk about the SL side, and downside support comes at 1220 level, and if we talk about target side, then first target comes at 1300, and if stock breaks this 1300, then further upside would be there up to the level of 1350. So one can keep an eye on Dr. Reddy.
Out on Dr. Reddy's. Okay, from the pharma pack, there are some interesting moves that Kunal is tracking, and we could definitely look at Dr. Reddy's. Another heavyweight counter, Abbott, is also continuously moving up, now at around 29,000 levels, 4% higher in trade. This is after 2 days of strong move has come in for the stock. Even yesterday, the stock was sharply higher by about 6.5%. And again, today there is a follow through buying, 5% odd for this one. And this is right after the earnings came in steady for Abbott India as well. So 29,247, it's been moving up pretty strongly in trade. Very expensive stock for retail investors at this point, Kunal. But what is your suggestion here for those who hold it? What's the outlook on this one?
Well, stock is doing very pretty much on a daily chart. Right now, trading at 29,320, and we may see a further upside momentum as well in the counter up to the level of 30,550. If we talk about overall scenario, since long stock has been trading in a rectangle formation only, and if at
Yes.
this level stock breaks this 30,550, then further upside would be there up to the level of 35,000 to 36,000. So anyone who is holding these stocks, please hold. As of now, we may see a very good upside momentum in the counter.
Okay, we may see a very strong upside on the counter. Of course, looks unaffordable for most of the retail investors at 29,240, but the upside still is intact. And after it breaks the 30,000, 30,500 mark, Kunal believes this is headed towards 35,000 mark as well. So keep an eye out on Abbott India within the pharma pack right there. Okay, Kunal, we're just going to be ending up, but anything that is important for the investors to keep in mind for the trading session today in terms of either the benchmark index or the stocks or the sectors right there that you will keep an eye out on very closely today?
Well, tomorrow is RBI policy, so it will be like high volatility. So please keep your position related to the intraday itself. If it's a banking or it's a NBFCs, and you can go for short-term trading, particularly in the pharma and FMCG counters.
Right, fair point. Thank you so much, Kunal, then for being with us in the morning edition, helping us navigate through many stock ideas and overall approach on the markets right ahead of the RBI policy. Viewers, we'll wrap it up at that as far as the morning edition of Market Today is concerned. But through the course of the day, stay tuned as we will continue to discuss what are the key expectations from the RBI policy tomorrow, and of course the impact that could come in on the market. So stay tuned through the course of the day. Market coverage and earnings coverage will continue for you on Business Today television.
In 2016, when I first attended this summit, Reliance's investment stood below 2,000 crores. Today, in less than a decade, our investments in Bengal have increased 20 times, and we are invested over 50,000 crores of rupees. Mamta Didi, we shall double this investment by the end of this decade. More importantly, our investments have created over 1 lakh direct jobs and